Bitcoin is almost always analyzed through its fiat price and market cap. However, given the uniqueness of the Bitcoin blockchain, we can actually see the network's real value, as well as use this fundamental data to improve and simplify our Bitcoin investing. Today, we're going to be looking at a few charts that try and use Bitcoin's real network value rather than just its default fiat pricing. And where better to start than the active address sentiment indicator, which is something we use fairly frequently on this channel, as it's one of the great shorter to mid-term metrics we have at trying to identify the peaks and troughs of Bitcoin's price action. And what we can see is this actually uses a few data points. It uses the 28-day active address change in percentage terms, as well as the 28-day % change in price. So the reason we look at these two metrics together is they try and provide a little bit of insight into whether Bitcoin's large move to the upside or large move to the downside is maybe justified by a huge increase or decrease in the actual utilization of the Bitcoin network. If we're seeing more and more users flood to use Bitcoin, then it kind of makes sense that we're seeing the price increase as it's supply and demand. And vice versa, if we're seeing less and less people actually utilize Bitcoin as what it was made for, a peer-to-peer electronic currency, then it maybe makes a little bit of sense that we see a little bit of a price decrease. There's a little bit more in-depth explanation on this metric below here, but it basically just uses standard deviation bands of the active addresses, and then the price change actually goes above or beneath these bands to give us these buy or sell signals. When we're above this upper red deviation line, it typically indicates that Bitcoin's maybe getting a little bit overheated. Maybe we've not seen enough new users coming into the network to really justify and validate the amount of percentage gains we've seen to the upside. But really, you shouldn't act immediately just as we cross above the red boundary or below the green boundary. I like to wait until it crosses back beneath the upper red boundary as a potential sale signal, or back up from beneath the green boundary. If we just look here, we can see this has been an incredibly accurate signal over the past few years. And if we just isolate here, we can see as we crossed back above pretty much at the Bitcoin bottom down here, that was an absolutely great buy signal. And every time we've crossed beneath, it maybe hasn't indicated a huge retracement in the Bitcoin price action, but it's indicated a little bit maybe of a stagnant period of price action where we wait to maybe see some new users come into the network, wait for the price to cool off a little bit, set a solid foundation to really fuel a leg to the upside. And recently, if we just zoom in here, we can actually see that Bitcoin has actually seen a little bit of a retracement, and that has been reflected in this active address sentiment indicator. We've seen as we've dipped beneath this upper red boundary, the 28-day percentage price change hasn't managed to break back above this deviation band. And we're actually seeing the amount of active network users decrease quite significantly. We've seen this from about just a few days ago, really, from a near 40% change in the 28-day active addresses. Now it's actually decreasing, meaning there's less and less network users than there were just 28 days ago. So that maybe is a little bit of an indication that the network's real value, being how many people are using Bitcoin, maybe isn't justifying this move to the upside. Maybe we're going to see a little bit of a short-term retracement. But this metric is not the only one we can use to try and get a better valuation of Bitcoin's real network value, and one we should actually be using in confluence alongside something like the advanced NVT signal. Now, this is one that actually for a few months wasn't the best at giving the most accurate signals around here, purely because of a couple of things. We saw the FTX collapse, which resulted in a huge amount of BTC being moved on-chain, off exchanges, potentially to self-custodian wallets or other exchanges, which maybe warped this metric a little bit. And we also see the huge rise in popularity of Bitcoin ordinals, which are these Bitcoin smart contract NFTs assigned to individual Satoshis, which saw maybe a little bit of a unnatural divergence to the upside, we'll call it, in network transaction value, because the advanced NVT ratio, if we just come down here, is looking at the network value or market cap divided by the 90-day moving average of daily transactional value in USD. So what this is looking at is not just how many people are using the network, but how much value is being passed around the network. And again, if we just exclude the few months here, this was actually a great metric at calling, once again, Bitcoin's peaks and bottoms. And the way I like to use it is actually to remove the absolute upper and absolute lower boundaries and just use these dotted deviation bands. And what we can see is, especially over the last few months, this has kind of regained its accuracy. If we just zoom in here, we can see that especially over the past few weeks and months, this called pretty much the short-term Bitcoin peak before we had a retracement from $40,000 into the $30,000 region. And then similar to the active address sentiment indicator, if we wait for a cross back above these lower and upper boundaries for our signals rather than just waiting until we cross beneath for the first time. We can see that as this crossed back above this, around $47,000, Bitcoin ran up to around $74,000, meaning this was an unbelievable buy signal. And we've now actually found support on this lower boundary, indicating that maybe there is a little bit more upside for BTC still to come. However, like we could see with the active address, there is a little bit of a divergence here. So as these two metrics aren't in unison, I would just tread carefully, make sure you're managing your risk appropriately, and maybe wait to see some other metrics for some confluence to either support your bullish or potentially short-term bearish thesis. But I think these two metrics are really great at not just looking at the fiat pricing. I think sometimes we can get a little bit carried away at Bitcoin's surpassing its previous all-time high, reaching $70,000. But like we said, Bitcoin white paper explained and outlined BTC as a peer-to-peer electronic currency. And we can see there's a huge positive correlation between its network utilization, not just the amount of people using it, but the amount of valuation actually on the network and its price. We can see these signals have been very reliable throughout Bitcoin's entire history, and we should definitely start paying attention as we're now potentially at a little bit of a conflicting point in time as we're seeing almost inverse signals in these two metrics. So it'll be interesting to pay attention to both of these over the coming weeks to see exactly how Bitcoin's price may play out. Also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we discussed today, as well as the many more that are all available on lookintobitcoin.com, your number one source for Bitcoin information. So just to summarize, the advanced NVT ratio and active address sentiment indicator, or the AASI, look at the network utilization to calculate a more real and fundamental network valuation as opposed to just the Bitcoin market cap. And we can look at the historical accuracy of upside and downside divergences on these shorter to medium term metrics of network usage and transactional value at predicting market peaks and bottoms. And like we could see, there are some signs that a cool off may be possible, looking at the active address sentiment indicator and the decrease in network users we're seeing. But there is still some room to the upside, like we're seeing. Even though there's less users, we're still seeing a huge amount of USD valuations being moved on chain. So it's really interesting to see how the Bitcoin price plays out over the coming weeks and months. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on using more on-chain metrics such as the active address and the advanced NVT to gain a more real, potentially fundamental network utilizational value to use alongside the price and market cap. Obviously, those are very useful when it comes to our analysis, but I think really deep diving into the network, into the blockchain to see the underlying real fundamental data can be incredibly helpful. And like we can see, incredibly accurate with our analysis. So as I said, let me know in the comments below how you use these and how you're looking to use them over the coming weeks and months. And I look forward to reading and replying to all of them. Thank you all very much for watching, and I'll see you in the next one.